is canceled. Have you seen what's been going on with stocks, with rates the last 48 hours? Did we just have another temper tantrum with the unwinding or the surprise increase in Japan? Was that it? Japan has come out and said, hey, we're sorry. We won't do that again. We won't surprise you. The Bank of Japan basically said, whoops, my bad. And they've come in and said, we won't be doing that again. So what is going on? Is the growth scare over? Did we just have an unwinding of some over leveraged bets that took the market down Friday and Monday? I don't know. You probably know that I do believe we are in a recession, but let's go through some things together about the US economy. And then let's not worry about what is or isn't happening over in Japan. When I look at the risks of a recession, and it is still my call that a recession will be backdated till June or July of 2024, these are just some things that I noted. Number one, non-farm payroll, which was reported last Friday, had the smallest increase since April. Unemployment. The unemployment rate is at the highest since October 21. Initial claims. Last week, initial claims were the highest since August of 2023. Continuing claims are the highest since November 2023. July ADP had the lowest reading since January. And then finally, ISM manufacturing came in with a rather dirty number at 46.8, which has historically been recession level. So the job market is clearly weakening. But as I run through those recession risks or indicators, all I am left with thinking is Jerome Powell is smiling. Jerome Powell has told us quite clearly that he knows he's going to have some softness in the labor market as he looks to take inflation down lower and getting close to the target of 2% average. You know, this little temper tantrum that we had earlier in the week really could just be proven to be a growth scare, something like long-term capital management or something over-leveraged that blew up. Maybe we'll hear about it by the end of the week. But yes, I don't think this is an all clear sign. I do think there's some buy the dip going on, some FOMO, things of that nature. But it is the data is certainly not clear, which it usually isn't. And one of the reasons, actually the reason I think this recession will continue to confuse most people is it's going to go down as a rolling recession. As somebody who has studied economics, looked at the economy for 30 plus years, we can only point to 1991 as a rolling recession. Any recession after that, the dot-com recession, the Great Recession, the COVID recession, all of those were an all-in recession, meaning everything in the economy tanked at the same time. You have been hearing me for well over 18 months now talking about a rolling recession. I'll give you an example of something. The rolling recession hit mortgage, right? Hit the mortgage brokers hard. We just got weekly updated data on mortgage, and it's not surprising. Actually, I called this last week. I said, congratulations, we just started a refi boom. Refi demand was up 16% week on week. Folks, this drop in rates, which is already having some give back, is going to pull some refis, some streamlines, FHA, VA streamlines off the sidelines. And that's exactly what happened. It was not enough to pull purchase demand. Purchase demand was only up 1%. Refi demand was up 16% week on week and 59% year on year. That is a sign of a rolling recession, right? You get hit really, really hard while other parts of the economy are okay. Then you kind of hit a bottom, you baseline, and then you come out. That is just what it seems to be happening in the mortgage industry. Purchase demand was up 1%, but down 11% year on year. It is still my belief that this election cycle, I've heard this more than any time in the last 20 years, 5 election cycles. I'm going to wait till after the election. I've seen folks like Logan and Mike and others talk about, hey, this whole notion that people are going to wait until after the election is nonsense. The data does not support that, and they're right. No election cycle that I've gone back and looked at really delayed demand. I think this one is different. I do, and I've called that a month ago. I think this demand cycle, people are like, hey, it's too hard, I'm too scared, I'm too pissed off, whatever. And you're like, we will revisit this next year. So it'll be interesting to see what comes in the data. I'm really looking forward to existing home sales later this month because I think July will prove that we broke the bottom at 3.88, but it will be interesting. We had some earnings announcements and some CEO commentary that I thought was interesting. I'll start with the CEO of Maersk. Maersk is a freight company, ocean liners, right? They're shipping these big containers. The CEO said, and I quote, "No sign of a U.S. recession in freight." I think that's interesting because, again, if you remember the global economy, what might be happening? Might be happening. Something that might be happening is foreign countries like China might see a risk of a Trump win and thus might want to ship more stuff now before a tariff is put in. That's just a logical assumption. So if that is true, then it probably shouldn't surprise you that more containers are leaving China and coming to the U.S. to avoid what would be a rather healthy tariff. So again, Maersk CEO, probably right, but could there be some other angle to explain why freight is up? I think that's true. Another thing to not forget, folks, if you are interested in real estate investing, this is your time. I think you've entered a buyer's market. I think there's more creative financing opportunities. And of course, you need to join School. School now has 2 accountability groups, of which I don't lead either. And I am thankful for the folks running those, Frank and Jared. What I'm hoping happens is you join one of the accountability calls, you introduce yourself, you start holding yourself accountable. Your buy box, you talk about what's going on in your market. I know the groups have looked at inspection reports. I know they brainstormed different topics. They talked about knob and tube. It's just a wealth of information. Don't be shy. Join School, introduce yourself. The community now is over 210 folks. Don't be shy. $20 a month gets you in a room with 200 other amazing investors. Join today. What other earnings did we get that should be interesting? How about Disney? Disney beat top line, beat bottom line. Looks like their streaming division turned a profit for the first time. Looks like it turned a profit a quarter ahead of schedule. However, their parks, pressure due to lower consumer demand and inflation. So lower demand, less revenue, inflation, higher costs. Looks like the low-end consumer is spending less at parks. Supermicro beat revenue, missed on earnings, did announce a 10-for-1 stock split. I don't know about you, but that seems like a quarter late. They probably should have announced that last quarter. Also, Supermicro's gross margins, this took a hit, dropped from 17 to 11.2%. Airbnb, is the Airbnb bust among us? Airbnb beat on revenue, missed on earnings, and the CEO warned of slowing U.S. demand. Interesting. Shopify beat top line, beat bottom line. Revenue was up 21%. Think about that, folks. Airbnb missed, Shopify beat. What is going on with the U.S. consumers? It is interesting to watch there. Hey, Danny, congrats on your second deal. Send me a note and I will send you a card. While we're doing that, let's congratulate Nicole. Nicole just got her first deal done. Her golden ticket is going out today. Again, folks, you can get a golden ticket for your first deal. You get a black card like Danny for any deal after that, and you can get as many black cards as you would like. Congrats, Danny and Nicole. What other earnings did I have here? Oh, the last thing we'll talk about is mom and pop landlords. You and me, mom and pop. Apparently, according to, I believe this came from Housing Wire. Oh, no, I'm sorry. This came from Resi Club. Resi Club, let's try to give credit where credit is due. 60%, 6 out of 10 of you and I plan to buy at least one rental property over the next 12 months. Think about that. 6 in 10 mom and pop landlords look to add at least one rental property to their portfolio over the next 12 months. That warms my heart. That means we are doing the work. We have a buy box. We're making offers. We're following up. Remember, folks, the key to getting a great deal in a buyer's market is follow-up. Follow-up. I have never gotten my great deal with my first offer. You have to follow up. You have to watch the motivation in the seller build. Now, again, you will be following up a lot of times, and most of those properties that you follow up on will go nowhere. But if you trust the process, you too will get your great deal. Alrighty, folks, at the end of this, don't forget that you have the opportunity to join us in Las Vegas, Nevada. We are hosting the second annual ORAT celebration, February 15th and 16th. It's Valentine's Day weekend. Bring your partner in crime, celebrate Valentine's Day on Friday, come to the Vegas event Saturday and Sunday, and then fly home on Monday, which is a holiday for most of you. Make it a weekend, make it life-changing. Buy your tickets today. They are selling out. I would hope to be sold out in the next, 45 or 50 days. So again, I'm going to keep talking about this until it is sold out. General admission is $299, VIP $699. It is the place to be. It is the place where you can get in a room with 400 plus amazing folks. You'll have 6 hours of networking. You'll have 12 or 13 presentations from people you know, trust, and respect, plus some other surprises, of course. So again, join school, buy your Vegas tickets. Let's get this thing started. And I am so happy for Nicole and Danny. If you do close a deal, don't forget to tell me so I can give you a shout out at the end of one of these as well. Folks, have an amazing day. Take care of yourself. Peace.